Good morning, everyone. In this video, we are going to be discussing the concept of volume. So volume is a somewhat tricky indicator. The reason why is because, excuse me, burping a lot. The reason why is because it has a lot of different applications, specifically 3 different ways that we use it. So that is a distribution, a reversal, and the breakout. Those are kind of the 3 things that we're looking for when we trade in the first place. So that's not really a problem. But understanding exactly what volume indication means what is really essential. It's not like with the RSI, for example, where you see a bear div or a bull div, and it's just there for you, right? Like you know, a bull div is obviously bullish, bear div is bearish, right? The other thing is that today in this video we are going to be using the Bitcoin chart to explain volume. You might be asking, and have noticed it, and asking why instead of equities like we usually trade. The answer is that crypto and Bitcoin is a 24/7 market, so it doesn't have any of the anomalies that might occur in price, like with equities markets that have a fixed open and close time. See, because equities have specific market hours, the first and the last hour of the day will almost always be the highest volume candles. So because of that, it makes it a lot harder to identify volume meaningfully on the daily time frame, for example. So with something like Bitcoin, it's again a 24/7 market, so that allows you to just view volume undisturbed, so to speak. With that being said, let's begin. So the first way I'd like to discuss volume is in the form of a distribution. So I would immediately like to point everyone out to this huge distribution that was formed right here. So as you can see, I marked out this area coinciding where the volume, which are these bars at the bottom, is huge, right? If you zoom out, at no point in time has there ever been higher volume than when Bitcoin was consolidating between 25,400 and 16,200, right? So how is this relevant to us? It's relevant because you can see a huge distribution forming after a long downtrend, right? This is the weekly chart, so each candlestick represents a week. So this lasted for about 282 days. This from June 2022 until March 2023 is when it finally broke out. So when you see high volume patterns forming on a distribution after a long downtrend or uptrend or something, that is typically a sign that accumulation is happening, or if it's at the top of ranges, then a shifting of hands is occurring and money is actually exiting from the current owners to a new set of bag holders. So in this case, volume is super high when the distribution is occurring. That means that a lot of people are buying in and setting up positions, and not just like setting up any positions, but huge ones, because again, look at this volume, right? If you bought over here, you made generational wealth when Bitcoin went from 16,000 to 111,000. So distributions, just remember, they will be forming at the tops and the bottoms of moves, and you'll know that it's a top or bottom when the volume is incredibly elevated like it is over here, especially the longer it is. Now, the second way that we use volume is in the form of a breakout. So for this, we're going to zoom in a little more and go in right over here. So as you can see, we have this trend line marking out top of the channel. We have the breakout, the retest, and the pump back up, right? So what we're effectively looking for is a high volume candle coinciding with the breakout and the retest level, and or the retest level, really. Now we have that over here, right? So as you can see, again, this is the volume. You have this orange line right here that is the moving average for the volume. Now you can tell volume is pretty low this whole time, ranging around here. And then we have this big volume candle over here that coincides with this candlestick right here. It's not a coincidence that this huge volume candlestick, the biggest one in a long time since we basically started the range way back like here, right, is the candlestick where it reclaims the EMAs, finished the retest, and then moved much, much higher, right? So breakouts can be validated using high volume. That is what you need to understand. If a breakout or a retest, which is just a part of the breakout, has a huge amount of volume to it, then that gives authenticity that the breakout is legit, right? Why is that? Well, you got to think about it. So if you have a breakout, and that implies an impulse candle, an imbalance, right? So price is rapidly moving from one area to another. So in this case, from 69,600 or 500 to 75,500 in a single day. Usually when price moves like this, it's an indication of, well, not much liquidity over here. Price is moving pretty quickly, so it's in price discovery. And, not many bids can be filled because, well, it's moving so quick that, not all the bids that get put in as the price is moving up can be filled. So it's supposed to be a low volume event. So if you have high volume on an impulse candle, that's a huge sign that this move was not induced by low liquidity, but the opposite, that there was so much demand, and if this were a red candle, then supply, vice versa again, that price shifted not to reflect, not as a reflection of low volume, but a reflection that there was so much demand that price had to aggressively reprice in order to meet that demand. And that's why you have this huge volume bar right here. So again, you want to look at volume and use it as a confluence and a confirmation for the breakout. High volume on a breakout and retest means that the breakout and retest is probably legit. Now the other way that we want to use high volume is with reversals. So this over here, or actually even better, this right here is a great example of a reversal. So you have this huge candle, obviously, right? Insane breadth on it. This is a, let's see, so that's a 20% candlestick in a day, meaning Bitcoin moved 20% in a whole day, which is mind-boggling. And as you can see, the volume is really, really freaking high. We have this huge wick on the bottom too, and obviously insane price movement. This, when I see this huge wick, the red candlestick, the huge price movement, and then the volume on there too, well, I'm immediately thinking is this is a reversal pattern, right? So This looks like it dropped a lot. I'm not saying this might necessarily be the bottom, but I am saying that I think relatively price is going to find a range inside of this relative balance that was formed off this 1 day candle and start to reverse higher. What I think of when I see this is that all these liquidations got hit, triggered forced selling and forced buying, and the volume was incredibly high because of that. But you got to think about it, a lot of these bids were either forcefully or voluntarily triggered during this liquidation event over here on Friday. And so a huge amount of orders went through, so it takes kind of time to rebuild all that. But nonetheless, because that huge amount of orders went through, I'm also thinking that in terms of the downside, right, because this is a downside candle, that if we're not going any lower and we're kind of like balancing over here, then the supply side pressure has probably eased a lot to the point where this is not just like emblematic of a downward candle and then more downside movement is coming, because in that case it probably should have done, you know, something like you know, go down and then lower, right? But it's not. These are technically lower highs, but there's also a higher low, so it's really distributing over here. So looking at it like this, it becomes a lot more obvious that this is a reversal. Now, obviously, we don't know where Bitcoin's going to move, but bookmark this, check it out in the future. Every single day that passes and we're not going lower and lower is a day where I am more confident calling this a reversal candle. Likewise, for example, right right over here. So former all-time highs. This was on Monday, 20th of January, 2025. And you can see we just briefly took out the highs right over here. Okay. And the volume was pretty freaking high, right? Also not a coincidence. Again, to put it into order flow terms, price swept this high level, previous all-time high. Ton of sell orders were resting above here, which is what causes the price to move down after it hit this level. It retested it, obviously. Got a ton of those sell orders filled over here, and then that changed the order flow and the price went down. What makes it look extra like a reversal to me, unlike, for example, this time, is that you see on this time there was relatively low volume. It's below the volume EMA even. While this time it was high volume and it swept the level. That suggests to me that it's not going to make it above here in the first place, right? It got rejected after trying to break out. In the second place, it has high volume and just swept a key level, key high time frame, like liquidity. You know, this was the former all-time high, now this is the new all-time high. And it had a lot of volume in its failure to break out and hold above there. So I look at that and I'm thinking, this is probably a reversal candlestick. You know, price is going to come down. I won't exactly know how much, but you know, that's where the TA comes in, and you'll want to mark out your levels like so and be like, yeah, you know, it's about here. I should want it to come back down, and then, you know, after that you do your analysis from there on. But you see a high volume candlestick with long wicks at the tops and bottoms. Those are usually good signs of a reversal candlestick. You want to change your bias in that case. Now, those three concepts aren't very difficult. It's just going to be putting them together with other confluences that makes it a little tricky. But again, to summarize, volume is going to be used in three different ways. We are using them in terms of reversal candlesticks. So to do that, we look at high time frame liquidity levels. We look at highs and lows formed. We look for sweeps, and then high wicks, long wicks on those candles with obviously high volume bars attached to them. If we see something like that, it is a huge indication of a reversal occurring. Likewise, we look at volume on a distribution, okay, and see if there is elevated volume when there is a breakout of the distribution range. Okay, so like right here, for example, we can tell there's a very obvious range. When there is a breakout, what we want to look for is a drop off in the volume. And on the retest, you want to have much, much, much lower volume than the last time it was in the distribution. Okay, again, what this signals is that huge amounts of supply have been torn through over here. And so the next time it comes in, there is just no more Bitcoin that wants to be sold at these levels. So the only place it can go up is higher, right? So that's another way that we use volume. And then the last one is again with breakouts. So you want to have some sort of high volume candlestick form either on the breakout itself or on the retest, right? And again, why is that relevant? Because usually breakouts will imply a huge imbalance candlestick, right? So large single move up, not like a distribution or a range. And it's in distributions and ranges where we have a lot of volume accumulate. Okay, so if you're having a high volume candlestick on an imbalance, that volume is accumulating in spite of the price movement, and that shows you that there is a lot of investor demand, or vice versa, if it's going down, a lot of supply to be sold, wanting to be sold. Thank you very much for watching. Hope you have a great rest of your day.